Sharply swinging down, up, then down again on Wall Street as markets try to assess the potential damage from President Trump's global trade war. The Dow Jones Industrial Average briefly erased a morning loss of 1,700 points, shot up more than 800 points, then went back down to a loss of 414 points. So really constantly up and down. So here to help you navigate around the topsy-turvy financial market is Hess, a CFA and managing partner with Riverside Retirement Advisors. Thanks for being with us.
Thanks for having me.
So we're just talking in the break. There is so much that's been happening over the last week, the last couple of days. What are you telling your clients? Because I have to imagine, like everybody at home, they're looking at their account saying, oh my goodness, what do I do?
Right. So yeah, and we have the advantage of not just serving individuals, but organizations as well. So a lot of our clients are 401ks and 403b plans who have a lot of employees who work for them. And so given that, we're talking to folks who range from age 20 all the way to age 75 and 80 years old. And for a lot of them, and most of them, what we're trying to counsel them on is to separate why things are happening, why the markets are going down the way that they are, and just remind them that markets do this from time to time. Right? So it's helpful to look at things from a historical context and say, all right, look, markets are down. The S&P dipped into bear market territory, which is 20% off from its recent highs just recently. But don't forget, that happened in 2022 as well. We didn't have a bear market, but stocks and bonds were down in 2022. People weren't really that worried back in 2022 because we had record unemployment low, right? So everybody had a job. People were making good money. And so they weren't really paying attention to their investment accounts. Back in 2020, what did we have? We had COVID, right? We had a super sharp market drop as well. So a lot of people were scared there. But what we saw were a lot of people staying the course and keeping their money as it was invested. 2018 was the last time we had a market decline. It was down, market was down around 6%. And that was, again, because of tariffs, focused primarily on China. But that was the last time we had a market decline. Then with the great financial crisis, 2008, right? Everybody remembers the housing crisis. But through all of that, if you zoom out and then you look at how the markets returned after those periods, they were up, and they were up by a lot, right? And so what we're trying to tell folks about now is, hey, don't worry about why markets are going down the way that they're going. Just focus on what's happened afterwards, which is they've gone up, right? So stay comfortable, stay calm.
The course.
Yeah, for folks who are saving in their retirement accounts, you're still putting money in every single paycheck, right? Well, hey, the good news is that money you're putting in, now you're buying stuff on sale. You're buying it 10% lower than what it was priced at
bargain prices, I suppose,
exactly,
right?
Bargain prices.
So that's the upside.
That's the upside, exactly. And then the other bright spot is, look, while stocks are going down, a lot of folks have bonds in their portfolios. And if you look at what bonds have returned over the recent kind of market turmoil in stock, compared to stocks, they're positive, right? So we're getting positive returns in the bond market. That's giving folks, especially folks who are older, near, at, or in retirement, that's giving them a higher level of comfort because they're looking at that portion of their portfolio and saying, oh, well, at least that's not going down. Or, hey, look at that, my bond portfolio is actually going up throughout this entire crisis.
And what would you say if someone's looking for maybe a way to hedge their bets, so to speak, to reduce the risk?
Yeah, I would say first and foremost, if you have a financial advisor, reach out to them, right? This is where advisors are earning their keep for their clients. So we're putting out commentaries, we're having phone calls. I'm sure other advisors are doing that with their clients. So I would tell folks to do that first. And I would also tell folks, try to read as much as you can from different information sources, right? And so one of the things we do is we try to find, we don't always doom scroll and look for all the negative news. We try to find the positive news as well.
Right.
Yeah.
Absolutely. Well, thanks for pointing out those positives and encouraging folks to just stay the course. We appreciate your being here, Cy. Thanks so much.
Thanks, Erica.